Greetings, David Boy, Black Diamond Mortgage, here with.
Zach Falk, also Black Diamond Mortgage.
We want to talk to you today about one of our products that's basically for people that are over 62 years of age and have a lot of equity in their home. And for whatever reason, they need to get some of that equity out for the remaining years of their life. And they're not going to qualify for a traditional mortgage, but it makes sense to get the money out of the home so they continue to live in the home as their primary residence. So it's called the reverse mortgage, and they're backed by FHA, so they're have a lot of regulations and stipulations to make them as safe as possible, but they're different. So I don't know, Zach, why don't you tell me something different about a reverse mortgage?
Well, when people think about a mortgage, they think about making a payment every month. That's just the way that our mind works when we hear the word mortgage. Something unique about the reverse is that doesn't happen.
Yes.
You can either have no payment. In some circumstances, you can actually have the mortgage pay you on a monthly basis, which is totally different and kind of hard to wrap your mind around when you're thinking about normal mortgages all the time.
Yeah, so what happens is, an example is let's say you paid your house all the way off, and something has come up in your life where you want to remain in your home, but the amount of money you have remaining through your monthly retirement income or your available savings is no longer going to meet your needs. And you're looking around at the only thing you have to get the money from without borrowing it from your family or, other means, is to basically take the money back out of the house, which you paid off. And the reverse mortgage allows you to do that. And so they let you take one lump sum, which would be a percentage of the value of the house. You could just take it out as a lump sum, or you could take a monthly payment stream from the home. So you may be in a situation where you are trying to live on $4,000 a month, and it's obvious that you need $6,000 a month, and you don't have any other source of income or any other cash, but you have a house that's paid off free and clear. The reverse mortgage could actually work as a means to pay you the additional $2,000 a month that you're short. And essentially what happens is the lender promises that for the remainder of your life, you can receive those payments, or you can receive a one-time disbursement and then not have to make monthly payments to pay it back. And so the reverse mortgage basically is a way to say, hey, you did pay off this house and it is worth something. And if you want to keep living there, you can go ahead and take a loan against the house, even if you don't have documented means to qualify.
Something else too is that if you have, we see this relatively frequently, where you have a small balance remaining for the current mortgage attached to the house, you don't have to own your home free and clear for a reverse mortgage to work. One way to think of it is to think of it like a traditional refinance. It's nothing like traditional, but that verbiage helps understand what takes place. The reverse mortgage can actually come in and pay off the existing lien that you have attached to the house. So maybe you've done a great job and you've paid it down to $100,000 and you're like, man, I'm just not quite to free and clear. That's okay. You can still get that reverse mortgage. That payoff just gets basically put into the calculation of how the reverse mortgage is going to work for you. So it's a really powerful tool to do what Dave was describing, where quality of life matters. And so why not take advantage of that when you've worked really hard to own property and pay your bills on time? It's an excellent product.
Now, I will say at Black Diamond Mortgage, our normal process would be to see if we could get you a traditional mortgage first. The reason between the two is if you've already paid your home off and you can just borrow some money and then pay interest and pay it back, then theoretically at the end of your life, you're going to have a little bit more net worth left over. So when you're in the other situation, it's because that's not going to work. You don't qualify. And so you still need the money. And so what are your remaining options? Then there's the reverse mortgage. Some other things to think about is you can refinance the reverse mortgage. Why would that happen? Well, for example, if you took out a reverse mortgage in 2018 and then you were receiving the benefits of that mortgage, but they weren't quite as much as you wish you got, well, then your property value doubled or tripled in the 2021 season. you can refinance and get access to more equity than what you had before. So they are a loan that you can pay off. Zach, why don't you talk about what might be of interest to a lot of families is what happens if you take out a reverse mortgage and in like 5-6 years, you either sell the house or you pass away and there's still a bunch of equity left in the house. What happens? Because I think that's what most people's greatest fear of the reverse mortgage is.
Absolutely. The fear is, do I give this bank all of my net worth by taking a reverse mortgage? The answer is no. So if we think about a traditional mortgage, we'll use easy numbers. Let's say it's a $200,000 balance. Every month you make a payment, that balance goes down. You owe the bank less money. On a reverse mortgage, the flip side is true. So if you take a $200,000 reverse, every month the balance does increase. And that gets back at why Dave said we look at other options first to make sure we're protecting your well-being. So in that same example, you take a $200,000 mortgage, the home is worth $600,000. 5-6 years go by, the loan balance increases to $300,000. Something happens, you sell the house. That $300,000 of remaining equity is your money, or those that you have set up to receive inheritance. It's still your money. So that's where the risk is actually not as intense as many people would like a reverse mortgage to have the stigma associated with it. You're basically taking advantage of that equity now and then still have some remaining. The bank needs to be sure that it's not going to have a problem with the loan either. So they're also looking to protect the financing that they give you. And so it's actually kind of a win-win. You take advantage of the equity, you retain whatever's remaining, and that either gets passed on or deposited into your bank account if you sell or refinance.
So a good way to take a reverse mortgage is to think about what you want to happen when you need to sell the house in the future, or if you pass away while in the home and there's a reverse mortgage on it. And the best way to explain it is the bank is going to give you a period of time to work it out with them. And so the best practice would be to set up a plan with who's going to care about it to get it worked out, which would mean if the family would like to inherit the home and you'd like to pass it on to them, they need to be in a position to get it sold in the reasonable amount of time. They pay the bank off and they get to keep the difference. And that's the best scenario. But even in the worst case scenario where let's say none of the children have the means to qualify for financing and there's a loan has to be dealt with, what the bank will do then is after giving the family a reasonable time to deal with it, they will take over and they will go ahead and sell the home. They are only going to keep the payoff, and then the rest is still going to go to whoever the estate is. And so even if all you got done was you prepared that the property will go to the kids after I pass away, but the kids didn't do anything, and then the bank came in and got the property, they're going to take enough to pay the mortgage back, and if they earn any more than that, they're still going to pass that on to the estate. So there is some protection there. You'll get more money, though, if you're able to sell it on your own. So the best practice is, just like anything, like if you were going to sell your home, you want to do it under your terms, go ahead and set up in advance that you're going to do it on your terms. But even if you don't, there's provisions in place to make sure that the bank is only entitled to the interest accrued and the balance borrowed.
Another tool for reverse that we haven't talked about yet is you can actually use it to procure property as well. So one really common scenario we see is you buy a house when you're younger, you've got a family, you've got kids, so you get a big house because you need a lot of space. Well, as life goes on, kids graduate, they move away, whatever the case may be, maybe you don't need that big house anymore, and so you're looking for an opportunity to downsize. But you also, like Dave was mentioning earlier, would like to keep your monthly cash flow in a reasonable position so you can enjoy life. You can take a trip here and there. You can go see the grandkids. Well, you can actually sell the large house, take whatever equity you have there, and you can use that equity as a down payment on a new, smaller home. Maybe you're downsizing, and to make the gap work between what the seller needs and what you have available, you can take a reverse mortgage. And so the advantage is you get a smaller home, something you can maintain easier, and you don't have a mortgage payment. And so that's a really cool tool, especially in today's day and age. We're in 2023. People have a lot of equity in their homes. And so that's a very attainable and in many cases smart way to set up a downsize scenario.
Did you just say you would buy a house and take out a mortgage and then not have a mortgage payment?
It's weird.
That is weird.
It's weird.
But it is one of the things you could do with a reverse mortgage. So what we'd like to do is if you really want to know more about reverse mortgages, what I recommend is that you check in with somebody like us and learn about them. And like I said, at our office, we're actually not going to sell you a reverse mortgage as a preferred way of getting you to get a mortgage at Black Diamond Mortgage. Our preferred option is to, if you need to borrow money, we're going to try for the forward mortgages available. And then if they're not available, we're going to show you the reverse mortgage. And then what's cool about the product is you actually go to a counseling from a third party that isn't us. And it's just a short thing where they just make sure you understand what it is. So you're not going to just take our word for it. You're going to listen to a HUD-approved counselor kind of walk you through a lot of things that we just talked about. Make sure you understand what you're doing. And then you proceed with the mortgage. And then you get an appraisal. You find out what your home is worth. And then you can go, whoa, or keep going. So if the house is worth a lot of money and it's going to provide all the benefits, you keep moving. If maybe the value is a little low and the benefits start shrinking, maybe you'd hit the pause button and decide whether a reverse mortgage is right for you. So it's a journey, and you enter the journey and check it out. So reverse mortgage is a tool in the toolbox. It's really no different than another mortgage in the sense that you're borrowing money. A bank puts a lien on your house so they can get paid back just in case everything goes wrong. But you can pay it back normal, and you can actually sell the house and move on with your life. Or you can pass the home on to your estate, but temporarily borrow money from your home using a reverse mortgage.
One final thought. Does a reverse mortgage require qualifying income?
No.
That's the beautiful thing that we're talking about here, is that that's why it's a tool in the toolkit. Is maybe the forward doesn't work for some reason, but you're in a position where you need that. That's why we're going to present it to you. And like Dave said, make sure you're very aware of what's taking place. But it's a tool. I think it's a cool tool.
So people have a lot of equity. If you need to use the equity, here's one of the tools. Ask if you have more questions about it. But I would say don't be afraid of a reverse mortgage. Just understand it and then decide if it's right for you. It's an option. And knowing all your options helps you make great decisions with your wealth and things like that. So.
You bet. Thanks, Dave. Thanks for the class on reverse mortgages.
You bet.
See you guys.